U.S. stock prices continued to rise last week. The S&P 500 climbed 1.95%, the Nasdaq jumped by 3.5%, and the Dow Jones increased by 0.66%. Friday's non-farm payrolls data boosted sentiment as the prospect of potential interest rate cuts pushed stocks and commodities prices into the green. NFP came in at 206,000, but the previous month's figures were revised downwards and unemployment rose. The dollar continued falling while gold, silver, and palladium prices sharply increased to multi-month highs. Platinum and oil prices also traded upwards, but natural gas prices slumped to a 7-week low. In geopolitics, Hezbollah launched another mass rocket attack on Israel. In the UK, the Labour Party swept to power with the former governing Conservatives, recording their worst result in 200 years. In France, the Eurosceptic National Coalition won the first round of parliamentary elections, but analysts doubted the coalition could secure a majority in the second round. The weekend's second round of the French elections was won by the New Popular Front, with President Macron's Ensemble Alliance in second, and the Eurosceptic National Rally in third place. No party will have a majority, but there appeared to be relief in the markets. The euro and European stocks increased in value on Monday. On Tuesday and Wednesday, Fed Chair Powell will provide testimony to Congress as traders watch for hints about future Fed moves. On Thursday, U.S. CPI inflation figures will be revealed. Facebook's price increased by 7% last week, hitting a record high of over $540. Since hitting a bottom of $414 in late April, the stock has skyrocketed by over 30%. The latest increase come after optimism over the company's AI investment. Meta recently stated that time spent by users on Meta's apps, including Instagram, has gone up due to AI-driven algorithms. The company is currently at the center of market speculation that it might next announce a stock split, since it's considered highly priced and is the sole member of the so-called Magnificent Seven stocks that has not done a split. Over the past week, Microsoft's stock price rose by 4.3% and is now trading above the $465 level. Its price has climbed by 10.2% over the past month. In the three-way battle for most valuable public company, Microsoft reclaimed the top spot from Apple, with Nvidia in third place. The company has continued its push towards generative AI with Copilot and Azure monetization. Markets are also looking ahead to Microsoft's earnings results, which should be posted in the last week of this month. Crude oil price rose by 2%, hitting above an $84 peak and testing a 2-month high on Friday. Black gold has now recorded 4 consecutive weeks of returns after. Tuesday's API and Wednesday's EIA data showed large decline in inventories, suggesting that U.S. demand is increasing due mainly to June's heat wave and ongoing demand related to the travel season. In the Middle East, Iran suggested that Israel will face consequences if the former launches a ground attack into Lebanon to fight Hezbollah. Gold prices climbed 2.9% by close of trading on Friday to hit its highest level in more than 2 months. While tensions in the Middle East rise, the increase in gold's price late in the week was mainly due to lower than expected data and Friday's NFP figures. The numbers suggest that next week's U.S. inflation data may come in lower, increasing the chances of a rate hike in September and potentially rekindling hopes of an additional rate cut by year's end. Copper prices climbed 6.6% in a week that saw the commodity rise above $4.65 and test a 9-week high. The third most used metal in the world has seen a boost in its use in recent years due to its application in renewable energy. Recent rising copper prices came after news that China will announce stimulus to upgrade its renewable energy infrastructure in mid-July. Expected U.S. rate cuts, which could cause strengthened manufacturing and product demand, might also be positive for the metal. The GBP-USD pair traded sharply higher in a week, dominated by the buildup and result of Thursday's general election. The governing Conservatives suffered its worst defeat in 200 years, and the opposition Labour Party, led by new Prime Minister Keir Starmer, recorded a landslide victory. The markets reacted positively, expecting a more pragmatic economic policy, including a better relationship with the European Union.